So now we get to talk some sports. Heard about tourism, now we hear about sports. You all look great. So we want to dig into a couple different issues here. We're going to talk about deal making. We're going to talk about the institutional play that's happening in sports right now. But to sort of set the stage, Gerry, I want to start with you. As you look across the world, you have AC Milan, you have the UFL, you have lots of different interests across sports. What's the state of deal making for sports right now, if you had to distill it?
Well, I'll distill it in one word: bubble.
Whoa, okay, good.
And so, you know, I think we've had it for a while. And bubble doesn't really do justice to it. I mean, these are phenomenal pieces of intellectual property that are intrinsically extremely valuable. There's just a tremendous amount of capital, particularly a lot of new capital, chasing them. And I think you got to ask yourself, when you talk about deal making, what kind of deal making are you talking about? Most people, when you talk about investing in sports, most people think today that means buying teams. And I would say that, you know, that's the trickiest part of the deal-making ecosystem. I think there's a lot of really creative investing that can be done, not involving the ownership of teams, minority stake or control stake, but around the monetization of the intellectual property that those teams or leagues represent.
And so, Amanda, do you agree with that assessment? I mean, you have a stake in Newcastle. You do a lot of deal-making, especially outbound from this region. What do you see in terms of valuations? Because when I hear bubble, I think prices are getting really high. What do you make of it?
No, I think valuations are continuing. I mean, there's scarce resource, and I think Gerry's absolutely right. I think, you know, there's because there's such scarce assets and because they're so prized, and with the increasing investment into media rights, and you know, there's a lot more institutional capital coming in. I think more institutional capital will chase the stricter regulatory environment. I think the fact that we've got financial controls actually protects some investment. So I think there's going to be a more, you know, I think actually investment in leagues and individual assets, there's obviously pros and cons with both. You can diversify perhaps your risk a great deal more in terms of investing in leagues, although getting there and getting the right league is difficult. So yeah, I think Gerry's pretty changed. And in terms of, you start with capital? You say, you know, capital markets, I think, will really support what is currently a more inherently private market.
And so, Gregg, one of the questions around sports is always, you know, can you get in and can you get out? You know, sort of this liquidity question and the ability to actually do the deals. You've been around lots of transactions. Most recently, I believe your firm advised on the Baltimore Orioles back in the United States. You've worked with Endeavor on UFC and done many other things. How easy is it to sort of get in and out, as it were?
Well, again, it depends which asset you're talking about. I think if you can invest in sports leagues, you do that all day long, and I think there'll always be a supply of it. I think the thing that's really developed over the past 5 or 10 years has been the introduction of institutional capital into the market. And that, especially as it relates to sports teams, I think, you know, one of the things I used to tell my clients is buying a minority stake in a sports team was like really, really, really expensive season tickets. Yeah. That's kind of all you got out of it. And that's changed. You've seen a massive increase in the valuation of these franchises and these leagues. And so it's been an appreciating asset. And then you've actually seen, with the introduction of institutional capital, liquidity. And that's been a major difference. So you've got the ability to buy a minority stake and get out because there's a real market for it. And then if you think about what's happened to a lot of these families that own these teams, for a while, at the beginning, it was their hobby. It was what they did with their excess cash, and it was something fun. Now, for the vast majority of them, it is the vast majority of their wealth. And so if you think about now generational transition around some of this ownership, the introduction of institutional capital provides liquidity to help facilitate that. So, you know, a lot of people have been worried, is institutional capital going to crowd out individuals? Yeah. I think it's actually quite beneficial to them because it's just more capital around it that creates liquidity for everybody.
And so, Brandon, you're in the midst of a lot of these deals as well, and you've seen the evolution. You guys have been an architect of the evolution of the sort of the maturity of this market in a lot of ways. What does have, building on what Gregg was just saying, institutions, individuals coming together, they can coexist, I would hope, but like, what does that look like, and what happens when the rubber meets the road there?
Yeah, I mean, 100% they can coexist. I would say probably two things. When you think about institutional capital, yeah, there's just the volume of money that's available, but I think it's also the flexible nature of institutional capital for all different parts of the ecosystem. So if you think about the individuals that own teams, anything you want to do with the team before, it was just always you had to fund it. You have to put in more money, more equity into the company. Now you have all of these different players and providers financing different pieces of that, whether that's transfer window financing in the European leagues, stadium financing, things like that. And I think that's driving the entire ecosystem around sports, both the teams, the leagues, as well as everything else in the ancillary, the ancillary universe around sports and how you monetize it.
I think that the one thing I'd say that's interesting on Gerry's comment around valuations, because it's right, it is, they just keep going up. And so we saw the Denver Broncos in the National Football League sell at $4.6 billion. It was eye-popping. And then the Commanders at $6 billion. It was eye-popping. And now there's discussion of a minority stake in the Dolphins at north of $7 billion. Not even control. And none of those are supportable by a discounted cash flow analysis, right?
Right.
And so people talk about revenue multiples, but it's not really it's more to compare across them. But the reality is it is now, with all the capital, it's become an asset class, and it's like art. What's it worth? It's worth what someone's going to pay for it. And so it may feel bubbly, and I think Gerry's right, but these valuations have only gone one way, and I expect them to continue to go that way.
So it feels like one of the holy grails in investing is the National Football League back home. By all accounts, Bloomberg is reporting, others as well, following Bloomberg naturally, that soon, maybe as soon as next week, the NFL owners are going to approve minority stakes on behalf of institutional investors. Gerry, this is something you followed very closely. You are a founding investor in the UFL, which is the combination of the USFL and the XFL. See, I got it right. I did not call it the XFL. You understand football. What does this mean if institutional money really is coming into the NFL? Because this has been long sought after, certainly wanted by the institutional class. What does it mean?
Well, it's funny, and Greg, you'll appreciate this. And the NFL reminds me of Goldman Sachs. Greg and I had the majority of our career at Goldman Sachs. And Goldman Sachs.
Weren't you in the same analyst class?
Yes, we were. We started together. And Goldman would always watch everybody trailblaze. They'd see what worked and what didn't work. And then when they found what worked, they would come in full force and blow everybody else out. That's what the NFL's doing here.
Yeah.
The NFL's watched, to their credit, they've watched this capitalism going to work. It's the new money that's come into sports that deems it an asset class. I've been investing in sports for 25 years, and I'm not so sure, when the equity research for sports is Forbes magazine.
You mean Bloomberg.
Or Bloomberg, right. When Goldman Sachs or any of the firms start writing really credible, detailed research on sports, let's sit down and talk about that. But it is indicative of the fact that, we have an imbalance here, and it's overshot. But the great thing about capitalism is it self-corrects. So the NFL has watched, and what's great about the NFL is they're going to most likely embrace the introduction of institutional capital into their ecosystem, but on their terms and in their way. And I think that's a huge positive because, it's a little bit of the Wild West right now. And it's interesting, from an NFL owner's perspective, a question one could ask is, how is an NBA team worth more than an NFL team, right? And the answer is, well, for the most part, there's difference, at different bookends of the spectrum. Maybe that's the case, but in general, that's not the case. But it is by virtue of the artificial inflation of valuations that you've seen go on, by the capital formation around buying minority stakes in teams with no governance and no pathway to liquidity. And so I think it's a positive because the NFL's doing it the way they're doing it in a way that's adaptive to their ecosystem. And again, if you're Roger Goodell, step back, what's your goal? So the last high watermark was $6 billion on a trade. We did have the price talk around the Dolphins at $7 billion. His goal is to get this linearly with as little volatility as possible to $10 billion a team.
Right.
Will that happen? Yes, that will happen.
How soon?
Won't be all of them.
How soon at $10 billion?
Well, if you ask Jerry Jones, he'd tell you right now.
Right.
But Jerry Jones is...
Jerry Jones would tell you a lot of things right now.
Well, but Jerry Jones isn't transacting on a control basis.
Yes.
But look, the price talk around the Dolphins, if it's true, is interesting. Here's the punchline. The punchline is it's artificially inflated. If you're the NFL, that's okay because they'll always be able to catch up. In a lot of these other instances, the question is going to be, particularly for investors, what's the entry point for you? Because you've had this massive escalation in these valuations, and frankly, a lot of the times, people in the infrastructure hasn't kept pace.
Right.
And it's in that dislocation that, frankly, I look at that, and that's basically our investment model. You go into that gap and you close it by creating companies around these teams and leagues.
Right.
I'd say the one piece that's interesting, especially on the NFL, is I agree with Gerry. The introduction of institutional capital will serve to drive valuations, although that's not the objective. If you actually talk to Roger Goodell, the person who's going to go sell their team for $10 billion, Roger doesn't care about it because he's leaving the league. That person's leaving the league. So what he cares about is the financial stability of the new owner that's coming in and the other 32 teams. That's why there are strict debt limits. It's why they're being really particular about what kind of capital comes in, the structure of the capital. What they really want is a very financially healthy league, and given the value of these franchises and the increasingly limited number of people that can write meaningful equity checks as individuals, bringing that institutional capital actually protects the sanctity of the health of the league.
And so, Brandon, not everybody can write a check to get themselves into either individually or institutionally even into an NFL team. You guys look across a spectrum at a wide variety of teams and leagues. You were very early on in EPL and did some great work there. You were first money into the Premier Lacrosse League, back in the U.S. What are some of the more nascent opportunities for investors who are looking into, especially institutional investors who are looking to get into sports?
Yeah, I mean, look, the hottest topic is probably women's sports right now in general, both in sort of the main core sports that people do, as well as all the ancillary sports that are emerging. Like, I'm personally, I don't know how other people feel, I'm personally, a big believer that over time women's sports is going to be huge. I think that's undeniable. I think for institutional capital, the one thing that we struggle with is sort of thinking about the timing of it, right? If you're living inside a fund with a 4 to 5 year horizon, the question is, how quickly does that actually play out? I do think over the last 6 months, you've seen an accelerant there, and I think women's sports is really picking up in terms of viewership, whether it was the NCAA tournament a couple months ago. And so I think you're starting to see those signs, but that, I think, from an institutional capital perspective, is the one thing that we struggle with, is trying to figure out how to play it inside the parameters of a fund. I don't have the solution for this, but I've thought about it a little bit, and I think you need different capital solutions for it. You need longer-term capital, people that can be patient, or you need vehicles that can provide liquidity where people can trade in and out of it and make a bet that this is the year or this is the next 2 years and play into it. But I think the long-term trends and the success of women's sports is inevitable at this point. It's just a question of timing and when it really does kick in.
Amanda, I want to pick up on something that Brandon said just there about sort of the long-dated capital. If you look around this region specifically, you've been deeply involved, in Newcastle specifically. That's a big bet on the part of the Saudis, on the EPL, and on football in general. What do institutions bring that is different, in terms of running a club or running a team? What's been your experience there?
Process, and that's important. I think that's a change that we've seen at the EPL over the last few years. And I think institutional, whether it's sovereign wealth fund capital, institutional, it's
Sure.
part of the same bucket. What you're talking about is the combination of individuals versus a corporate. And I think that process is very important. I think we run our businesses, I certainly know from the experience of the Premier League, incredibly professionally. The businesses now have great executives. We have a great executive team that we've put together, and I think all of that process helps. I think, to Brandon's point, I think that funds should be termed out. I think we should see more 10-year, 12-year funds, or some flexibility within fund structures that you can move. One of the big problems with the NFL deal originally was that it was long dated. There was always a pushback against sovereign wealth funds investing in the NFL. We looked, a few years ago, about 5 or 6 years ago, at a deal, and it was almost impossible for us to get access to that asset class.
Yeah.
So I think if you put the structure right and work with teams to understand how that capital structure, how the equity works, but also what type of debt structures we can do behind in terms of supportive to those funds, I think it will help liquidity. Because, as professional as our businesses are, there is a lack of liquidity still in certain areas that needs to improve. And there's huge liquidity coming from this region, and it'd be nice to see this region, invest more into the NFL and the US.
Yeah. So Gerry, you know, your experience with AC Milan, I want to talk about that a little bit because that's been, I saw your chuckle. And actually for more on AC Milan and Gerry's involvement, you can watch The Deal on Bloomberg, hosted by me and Alex Rodriguez. See, just a little plug for our previous work. When you think about AC Milan and sort of what you've learned so far, my next guest on this stage is going to be Todd Boehly. He'll talk a little bit probably about his baptism by fire into EPL. Like, what have you taken away, especially given your experience doing this for a couple decades now, that's new and different about either that sport or the state of, call it global football?
Look, the answer to the question is everything that we've experienced in the close to 2 years that we've owned AC Milan is pretty much what I knew going in. But, you know, knowing it theoretically and then experiencing it tangibly, you know, there are some differences. I'd say first and foremost, you know, our partner in AC Milan are the fans. And, you know, I take that very seriously. And I say that as an American, because in America, you know, I'd say the owners there don't have the same kind of partnership. Right? And you got to take that seriously in European football, and I do. And you certainly have to take it very seriously in Italy. You know, there is an opportunity here, at least in our investment thesis, to professionalize the way these things are run. And, you know, these are, as Gregg said, these are not hobbies for rich guys anymore, right? And the reason why you're seeing institutional capital now being attracted to it is because these are multi-billion-dollar live event entertainment businesses. And you got to balance, you know, delivering for the fans. The fans just want to win. The beauty of sports, though, is, you know, if you win every time, you know, the irony is that you actually, you know, make the league or the competition less interesting. So the human element, the unpredictability of the human element, you know, is what makes these things so valuable. But you always want to be vying for the championship. You always want to be going as far in the competition as possible. And to do that, you know, you have to balance the short-term nature of winning every year versus the long-term sustainability and consistency of lowering the amplitude and the volatility of that performance. And so, you know, these things trade as a multiple of revenue. I think that's lazy. These things should trade as a multiple of cash flow, right? Cash flow generation is a positive, not a negative. You'll reinvest the cash flow into improving the squad and winning, right? And so it's a virtuous circle. By the way, no different than any other company. It's just that sometimes the emotions get to everybody and it's here to moment. Best thing we can do as stewards of this asset for Italy and the fans is to make sure we set it up for long-term success. And obviously we want to win every year. But that's been the really interesting thing. And, you know, we haven't really been a control owner of a major sports property before. And so, you know, I've been around it, certainly with the Yankees and the Cowboys and the NFL. But that's been the best part of the learning curve.
That's such an interesting point, Gregg, that Gerry just brought up. And we were talking about it a little bit backstage, which is sports is just different. I mean, all of you across the stage have worked outside of sports as well. And so there's a playbook of some sort for almost every industry, but sports hits different. I mean, Gregg, I've seen you at UFC fights. You know, you worked clearly on that deal with Endeavor and still work with them. You know, how does that emotion, that passion element, how does it change the process by which you do business?
Well, it's that passion that makes it so valuable, without a doubt. And I think if you go back to a macro level as to why all these valuations are increasing and why we're seeing all of this interest in capital in sports, it's been the transformation of the media landscape. And so in the past 10 years, you've had the whole media world go to a streaming world where any entertainment you can watch when you want it, how you want to watch it. You can fast forward through commercials, you can subscribe to it. And so what had been, you know, 50 years of an ad-supported media world, that went away, except live sports. Live sports are the one thing you need to watch when it happens or you kind of miss the plot. So you can watch it when it happens and you can serve ads into it when it happens. So it's become the most valuable media property. And oh, by the way, sports are actually kind of conducive to ads. There's pregame, postgame, halftime, timeouts, stoppage and play. And it's not really interrupting the flow of the programming. And so you know your target audience, you know when they're going to be watching it. And that's why you've seen the media rights of sports go to unbelievable levels. You know, there's speculation around a $76 billion NBA media rights deal. I think as Gerry talked about it, what these things really are, you know, an NFL team is super interesting. You own a city, you own the franchise, you can sell tickets, you can sell merchandise, but you really have is 1/32 of the most valuable media property in the world. And it's the passion around that that really drives the interest and drives the ability for advertisers or for tickets or for subscribers or anything else.
I was just going to say that the distribution that Greg's talking about, and this is building on what he says, is the globalization of the fan base, because everyone has access to the content. So you had the Premier League started playing games in the US, I don't know how long ago it was, 5-7 years ago, and then all of a sudden everyone decided they were a diehard Liverpool fan or whatever.
Right.
But you have that globalization going on, which is just driving the entire industry. I always joke that 10, 12 years ago, when you go to sell a sports team, if you're selling, the team in Minnesota, you go around, the first thing you do to put together a buyer's list is look at who owns all the car dealerships and who owns all the restaurants in that area. And that has completely changed with the globalization of the fan base and the institutionalization of the money coming in, which has fueled what Gerry would call a bubble, but that's really driven, I think, the valuation of the teams.
And now if you're selling a franchise in Minnesota, you sell it to a former Major League Baseball star. Again, just bringing it back. Just bringing it back. And so, Amanda, it's a really interesting point about the globalization piece of it, especially from a media perspective. I have to think, as you're looking at deals, whether it's Newcastle or golf or whatever it is, it's got to be that sort of global approach. But how feasible is it to really monetize the media landscape globally?
I think we have to be. I think we mustn't be complacent. I think as rights owners, live sport is the most valuable asset, but we've got to make sure we deliver great entertainment. And so I think, as I know from my own personal experience, we try to do everything we can when we get a live game to make sure that we create as much artistry and magic around those games. And whether you're in any different things, the competition for those live rights is going to increase. So I think that the more innovative we can get, then the rights will continue to increase. But I think we have to understand how we're going to deliver those rights in the next 10 years. What's the Premier League going to look like? For instance, we've just finished an international round. We've got other leagues going through their broadcasting rights. And there's going to be a massive step change from the way we deliver and consume rights traditionally now, and how we're going to do that in the next 6-7 years. And that might take a dip in valuation over a period once we get the infrastructure in place to make sure we can deliver a kind of direct-to-consumer model. And at some point that will happen. And but I think what we understand, and what I loved about what everybody said today, it's the excitement of sport, and live sport is unique, and we got to make sure that we deliver it correctly.
So, Gerry, picking up on that point, you're also in the media business. I think more than reportedly, you've got some interest in a big media asset back in the United States. How do you factor that in? I mean, building on what Amanda's saying, how do you factor media into a valuation when the media world is so uncertain?
Look, this is why it's so difficult to invest in these intellectually property-based assets, because it's very hard for guys like us to underwrite the spreadsheet math. We started the Yes Network with the Yankees in 2001. By 2008, we had taken 3.5 times our money out just through levered recaps. We sold it to Murdoch in 2013 for $4 billion, and then we bought it back as RedBird with the Yankees and Amazon in 2019. So that's almost a 20-year transom. And we started as a growth equity play, and we bought it back as a utility. And the regional sports network model that we kind of pioneered, has now been defeased, and it's probably going to get nationalized by Major League Baseball. But we bought back into it knowing all of that, but we knew what the power of that intellectual property was in the tri-state 9 million person area of New York, New Jersey, and Connecticut, right? And again, when you look at NFL games last year, of the top 100 shows on television, 93 were NFL games.
Right.
So, you're going to be for some time in this uncomfortable area as the evolution of direct-to-consumer and streaming and technological disintermediation gets absorbed. The one thing I've always said is that I think the death of the cable bundle was greatly exaggerated. Mm-hmm. What the consumer wants is a value proposition, and linear cable still delivers the best value proposition. Most people aren't going to buy 18 different streaming services. So I never thought ESPN was going down the way everyone else thought. But what you're going to see is the linear model and the direct-to-consumer model coexisting.
Right.
The challenge is how do you underwrite that mathematically? And it's going to be hard. So you're going to have to make some judgments, which is why I think having longevity, investing in this space is really important, because it's going to require in this transition some judgment calls.
Right. And to ride it out.
Yeah.
Can I ask who do you think should underwrite that point? Do you think the league should underwrite it? Do you think the owners should? Do you think
That's a great question. I actually think on the league point, I've suggested somewhat provocatively to the commissioners in the U.S. that the next time there's a media deal up for renewal, they should take 20 cents off the top for the house.
Yep.
And capitalize themselves. Yep. Because the leagues are, I think, in this transition, and you see, they're the next Disney, right? And Netflix is now looking at getting into live sports programming. The leagues are sitting there with that at their fingertips.
Yep.
Now that's controversial, obviously, because if you're an owner and you've lived for the last few decades with a league that's just a pass-through, you say, well, wait a minute, hold on, you're changing the economic construct. But there is that possibility, and so I think everything should be on the table in terms of this transition and the economic sharing. You're seeing economic sharing with players,
Yep.
right? The players now, at least in golf and in collegiate,
Yep.
they now have a seat at the economic table.
Yep.
And I think that's a positive, and I think that's going to continue. But it's going to require some transition. And I think the economic sharing around the media pie is going to need to evolve, and the relationship between leagues and teams is going to have to evolve.
All right, so we only have about 2 minutes left. I want to spend them with Brandon and Gregg on one specific question that's going to be the same for each of you, or slightly more or less the same. Brandon, when people come to you and say, I'm interested in buying something in sports, what are they most often looking for?
Well, I mean, that's a difficult question because people have all different types
Sure.
of agendas, and so it depends on who's calling. I think most people, if you're talking about uber wealthy people that want to be in the sports business, most people are thinking about teams, right? I think if you think about all of the ecosystem we've been talking about, most people, I think, don't believe that there's an opportunity to invest in or own leagues, which I think is super. It's underlooked and it's super exciting because if you go back to what Gerry was saying, you control the media rights, you kind of control the entire landscape. To me, that's like the holy grail. And then we probably don't have time to get into this, but having focus on teams and leagues, which are the most exciting part, there's a whole world around sports, which I think for our perspective as investors, that's where we tend to focus the most. Like one of our most successful investments was in DraftKings probably 8 or 9 years ago. And we did that because the way that fans were monetized at that time, you literally put the game on television, you showed them some advertising, and that was it. And you have the most engaged fan bases in the world. And it was like, there's so much to do. And that's grown a lot over the last, 8 or 10 years. But like a lot of times we talk to people about figuring out ways to play sports outside of just buying a team.
Right. All right, Gregg, last question for you.
Yes. So it's funny, our primary business isn't in sports. But we happen to not be able to get out of the way of doing it given who our client base is. So our whole model is serving family business owners and founders and giving them advice on their businesses, investing in their business with our capital, and allowing them to invest alongside us in our funds. So you've got kind of 220 families in this network. Probably a quarter of them happen to own sports teams.
Wow.
And so there's so much flow around it. And so when someone comes to us and they're interested in sports, a lot of times it's a pure interest. And so Ryan Smith's a great example.
Yeah.
So Ryan Smith sells Qualtrics, has a lot of money. He loves basketball. He's from Utah. He buys the Utah Jazz. It's awesome. Okay, that's great. He's running around doing that. I don't think Ryan Smith's ever been to a hockey game. But Ryan loves Salt Lake and loves Utah, and he wants to make Utah great. And when the Coyotes were kind of going under and playing in a 4,000-seat stadium in Arizona, and Gary Bettman needed a solution, he went to Ryan. And Ryan said, well, I don't really know anything about hockey, but I can make Utah great. And so a lot of the families that in our world that are interested in sports are actually, there's a little bit of a civic duty to it. It's trying to make their city great. And we're now seeing a lot of real estate development around it. So it's an economic opportunity. And so I'd say for the most part, there's a passion in sports, back to your original point. And there's a real desire to try to invest back in their community to make it great.
Guys, I could talk to you all afternoon about this. Thank you so much. An embarrassment of riches on this panel. Gerry, Brandon, Gregg, Amanda, thank you so much. Appreciate it.
Thanks, Gerry.
And stay tuned for Todd Bowley. All right, see you.